Hi everyone, welcome back to Web3 Daily. The market today feels a bit weird. Bitcoin is basically stuck around 113, barely moving more than 1% in the whole day. Ethereum is hovering right under 4.2, like it's hitting a ceiling but not breaking through, with volume drying up. Among the big names, Solana and Dogecoin got a sudden push. Short-term money rushed in and pulled them up, while most other coins are just jogging in place with tiny moves. The vibe right now is that the market is holding its breath. Everyone's waiting for the Fed to speak, but nobody dares to play the first card. Honestly, this is the kind of quiet that usually shows up when money is about to loosen up the watch, and wait, mood is thick. Have you noticed the meme coins are making a comeback again? The past couple of days, the craziest one by far, Kanye West just launched his own coin called YZY, built on Solana, and it absolutely exploded. Within the first 40 minutes, it shot up to a $3 billion market cap. And yeah, it didn't last a few hours later. It dropped back to around 1 billion. My first reaction: this is literally the crypto version of Yeezy. My X feed was flooded with screenshots. Wallet buys crazy slippage. And yes, even PFP whales aping in. But once you dig in, it gets wild. The tokenomics are pretty centralized. 70% of the supply sits in the wallet, linked to Kanye's own Yeezy Investments LLC. Add a few insider wallets, and you're looking at 90% plus held by the inner circle. That's not a fair launch. That's just a PR with a ledger. He claimed he used the 25 smart contracts to hide the real one and stop snipers. Didn't work. People still got wrecked. One guy lost 700k just buying the wrong token. Meanwhile, another guy made 3.4 million off one snipe with a 24k gas fee. Here's the irony. Kanye literally posted earlier this year that someone offered him 2 million to show a shitcoin, and he said no because I won't rug my brothers. Now, he basically built the rug himself and invited everyone in. This isn't just about one coin though. What it shows is how fast clout can flip into liquidity, and how little time people take to ask real questions. Yeah, you can make 10x in 5 minutes. But the odds are, you're gonna be the one buying someone else's exit. And it makes me wonder if all these new coins are just mood trades wrapped in branding. What are we really investing in anymore? Anyway, if the next celebrity to launch a token is even bigger, this thing might have legs. But if not, we just watched another pump and dump with better music. The Fed is back with the hawkish tone, and this time it's Cleveland's new president Bess Hammack dropping the bomb. If we were meeting tomorrow, I wouldn't see a case for cutting rates. That line hit hard. I was about to hit a long, then stopped cold. Bitcoin's been reflecting this shift all week, from 124k highs to hovering around 113k, now nearly a 10% drop. All because the market got too comfortable betting on a September rate cut, and now realizes it might not happen. The crazy part, just 6 or 7 days ago, everyone was pricing in a 100% chance of a cut. That dropped to 70%, basically overnight. Fear and greed index fell from 75 to 44. That's like going from Miami to Montreal overnight. To me,
this isn't just a hit to sentiment. It's a coordinated message from the Fed. Don't get too excited. Don't front-run policy.
Technically, BTC hasn't broken down yet. There's still a key support around 110.8k, but if that cracks, 100k becomes the next battleground. And when that happens, short sellers are going to swarm in. For retail, this is not the time to chase bounces. You gotta ask yourself, can you stomach another leg down? If not, just sit still. This market's not about catching luck. It's about who blinks first. I was honestly frozen when I read this. Someone just lost 783 BTC. That's like $90 million. All because they trusted a fake hardware wallet customer support call. And this wasn't a hack. They handed over their seed phrase. It's a textbook social engineering job. The scammer acts like official support, talks super professional, creates a fake issue, and says they need you to verify your wallet. Once you give that phrase, boom, BTC gone. Then they chop it up and run it through Wasabi to wash it. What gets me is, this isn't even new. This exact scam happened last year, also in August. Back then, over 200 million was lost. The playbook hasn't changed, but people are still falling for it. This makes me super anxious, especially as someone who's held coins long-term and self-custodies. We tell ourselves cold wallets are the safest, but if a scammer just asks you for your keys, and you give it, none of that matters. This isn't about tech anymore, it's about psychology. They prey on your trust in the word support. They count on you being vulnerable and grateful someone's helping. So here's my advice. If someone ever asks for your seed phrase, they're a scammer. Doesn't matter how legit they sound. If you really have a problem, go to the project's official site and use the contact info there. Don't trust messages. Don't answer random calls. And for the love of God, don't click any links. I don't even open Telegram DMs from anyone claiming to be support anymore. Even when I message a project first, I double check this space is dark, and the more value in your wallet, the more you become a target. So you probably caught this one. There's this ready meal company called DDC, and they're quietly turning into a Bitcoin whale on the US stock market. At first, I thought it was just a PR move. They bought 100 BTC, made a little noise, but then, just days later, they doubled down and grabbed another 100. Now they're sitting on 688 BTC total, and their CEO, she came out and said they're targeting 10-0 BTC. It's wild. This isn't a tech company. They don't do SaaS or finance. They sell frozen meal kits. And now they're making BTC a core treasury asset. That's a serious conviction play. The craziest part, they broke it down by share, literally told investors how many sats per 1,000 shares you are holding. They're turning their stock into a proxy BTC trade. My first thought was, they're not just speculating, they're building a whole narrative. BTC isn't just on their balance sheet, it's part of their capital strategy, their story to Wall Street. Of course, not everyone's clapping. Some analysts say this could tank their credit rating. And yeah, if BTC drops 20% in a day, their equity gets smashed. But at this point, who isn't betting on something? They've got a cash flow, they've got a product. What they want now is attention, and the BTC delivers that. Honestly, I respect the play. It shows one thing. Old school businesses aren't scared of crypto anymore. They're starting to see it as an edge, a moat. And that's a big shift. Gemini just made a serious move. They locked in a MiCA license from Malta. Might not sound huge at first, but it's a big signal. They're going all in on Europe. This gave them legal clearance to operate across 30+ countries in the EU. Spot trading, custody, derivatives, the whole stack. For a US exchange that's been under regulatory pressure, this is basically unlocking a new game mode, and Gemini's been laying the groundwork. Back in May, they secured a MiFi 2 license in Ireland. Then in June, they rolled out tokenized US stocks. Now with MiK, they've completed the setup. They're not just dipping in, they're planting a flag. First thought that hit me, this is their backup plan turning into the main plan. The Winklevoss twins have said it before they're done, waiting for US clarity. Now they're building outside of it. What's interesting is, they're not just doing spot, they want to launch derivatives. That tells me they're not chasing retail. They're targeting big money.
Zoom out, and it fits a bigger trend. Europe stepping up, while the US fumbles around with no federal crypto law. The EU's giving projects a clear runway.
That's going to push more US-based teams to shift focus, not out of preference, but out of necessity.
Gemini might be the first big one, but I'd bet others follow.
Coinbase, Kraken, maybe even major DAOs. They're all going to want that MiCA passport. So if you're building anything compliance-heavy or TradFi adjacent, take a hard look at Europe right now. It's not the fallback anymore. It's where the action is. There's a new law that just quietly changed the game, the Genius Act. It's the first time the US has passed a federal-level bill, giving stablecoins a clear regulatory framework. Here's why it matters. Up until now, stablecoins have been living in a legal gray zone. This law says if you want to issue one, you need to back it with low-risk assets like US treasuries, and you are going to be under the Fed's eye. No more Wild West minting. It's a gatekeeper move. Half the shady projects, they're out. But at the same time, big institutions now have a green light to enter. What hit me hardest was this quote from Solana's policy head, Kristen Smith. She said, when the law legitimizes stablecoins, it's not just the token, it's the chain they run on. That's a big deal. The rails finally get recognized. So yeah, if your chain can support compliant stablecoins, you're basically infrastructure now. You're not gonna get shut down. You're part of the system. This is also a political flex. Since 2017, crypto's been slowly building lobbying muscle. Now it has full-on packs influencing real legislation. This isn't just survival, it's offense. With this law live,
I expect we'll see banks launch their own stablecoins, maybe even tech giants rolling out on-chain dollars.
And on the flip side, sketchy projects like USDD or backdoor algorithmic coins, they're gonna get squeezed out. Bottom line, this is the stablecoin sector's coming-of-age moment. No more pirate ships. We're entering the era of regulation-ready finance. This move from Swift? It's subtle, but it might be the biggest institutional signal we've seen all month. They're testing cross-border settlements and tokenized asset transfers on the Hedera public chain. Not a private blockchain, not a sandbox, a real public layer. They're running these pilot tests to see if value transfer and settlement verification can actually work better on-chain than on their old infrastructure. That alone is wild. HBAR Hedera's token popped a little after the news, not a crazy pump, but the kind of move that says smart money is quietly noticing. Then we saw Grayscale file a trust product for Hedera, and if you've been around, you know what that usually means. They're expecting demand. Regulatory green light might already be in motion. My take, HBAR is probably turning into one of those no-hype, high-signal tokens. Not something to scalp, but maybe something to keep on your radar if you like front-running institutional flows. Zoom out. This isn't about Hedera. It's about Swift. They move quadrillions annually. If they're now publicly using permissionless infrastructure, that's not a side quest. That's a shift. I'm putting this one in my TradFi, officially dipping toes into DeFi Reels folder. It won't go viral, but it might be where a lot of things quietly begin. So yeah, today's market isn't hot. It's quiet, stuck, like a pool of water slowly evaporating, with just a few bubbles popping here and there. Bitcoin's going sideways, Ethereum's losing steam, big players aren't moving, small players don't want to chase. The main topic is just a celebrity hype, and all the news is about TradFi warming up to crypto. That's the scene. Charts look bad, vibes are cold, but narratives are forming. Funny enough, I actually like markets like this. When there's no hype, no FOMO, that's when real setups start to form. Catch you next time. Stay safe out there, and more importantly, stay sharp.